there's very few people that actually want that at the beginning. So it's all about just being like, all right, well, I can't make your number work using a bank. So here's my creative offer and let me know if you want it. And you have to wait like months for these people to circle back. It's not like a thing where they come back in 2 days and they're like, oh, I'm into it. Like they really need to like be smacked over the head. Like the market is not paying the price that they want without creative terms. Yeah. And so I try to just like throw out a lot of offers and put out like a lot of offers like on paper. And I find that a good amount of people are like coming back, especially as like the interest rates went up. People that want to sell and want their price, they're kind of like forced into this. And now that I've done this like so many times, it really helps me because I can just like walk them through at the beginning. I can be like, look, here are the different ways to do it that's compliant, right? If you pick the route that you like the most, we'll structure it that way. And then we can dial in like all the terms and everything. I think that they feel a lot more comfortable that I know so much about it and that I can explain to them.
Welcome to the Creating Wealth Podcast, where Kyle Curtin takes you on an extraordinary journey alongside renowned multifamily real estate experts from every corner of the United States. We teach you how to harness the power of real estate investing and witness the transformation of your wealth building strategy. Let's create wealth together.
What's up, guys? Welcome to episode 183 of the Creating Wealth Podcast. Today, we get the great pleasure of chatting with Ben Simon. Ben is one of the founders of Archer Acquisitions, among a few other awesome endeavors. What's going on, handsome? How we doing, man? I'm super excited to have you on here, dude.
Yeah, thanks for having me on. Really looking forward to getting in and kind of nerding out about some real estate.
Absolutely, man. It's the thing we know and love. But yeah, dude. So like we were mentioning, the one of the ways that I usually, kind of let guests jump in is like to kind of start your story, wherever you want to jump in is super cool. Up to whatever point you want to, kind of drop off at is super neat. But yeah, give us some background on you, man.
Yeah, cool. I'm just going to give you like a real high level summary of everything and then
Sure.
we can dive down whatever rabbit holes you want. So I consider myself like a serial entrepreneur. I started my first company when I was 13. I had like a full crew of adults working for me in a landscaping company, and I was like managing it, but like texting them under the desk in school.
That's badass.
I actually sold the company. I mean, it wasn't a huge company, but I sold the company, I think, like junior year of high school, and I restarted that company with a buddy of mine, Carl, and actually we're still working together, and that was like way back when in like 2013. So we've been working together for a very long time now, and it was way easier the second time around. I had a driver's license, and we scaled that company, and then I think like 2 or 3 years later we sold it again. And then I actually don't know I get too deep into this in the real estate world, but I got into the cannabis industry, and I started a couple companies out in Oregon. And really, I think like the relevant part of that, which we could certainly get into, is like that was the situation where I learned all about bad business partnerships. And also it kind of helped me a lot because that was like a really fun, crazy, wild ride when I was younger. But I kind of knew after doing that I was looking for like a more like conventional industry and not one that had such like a roller coaster dynamic. And so I learned about Biggerpockets, and I was like, after the first episode, I was like, I'm all in. That's my personality anyways. But I just gobbled up a bunch of it, and I was like, okay, I want to get into real estate. My real estate journey started about 5 years ago. For about 6-7 months, I worked for like an investor developer doing like small to medium size multifamily and like condo conversions in specific neighborhoods in Boston. And I helped him with like property management and bookkeeping, which I'm honestly horrible at. But the whole time I was just listening to podcasts and like chatting with people on WhatsApp, like looking for deals and whatnot. And he told me that if I wanted to become an investor, I should go be a real estate agent. And I did try it for like a couple of months. But what I kind of found is in many situations, there was this mismatched like value proposition where the investors that I was working with, they just wanted great deals. Great deals very typically aren't on MLS. Now, if you're looking at like House Hack or whatnot, like obviously MLS is a great place, and you can do exceptionally well starting out house hacking. But I was working with like a group of people. They wanted like got rehab 3 families in Dorchester, and it's like you weren't getting those on MLS.
No.
And so like I kept like taking. I remember I would like take them to the property, and like they would be giving me the numbers, and I'd be doing like the napkin math, and I'm like, this deal doesn't work. But as an agent, I still felt like, well, I should try to sell the property to make money. But what happened was like randomly through like a Facebook group, I actually met this guy who, as it later turns out, was like a convicted bank robber, but he had a wholesale deal. And I learned what wholesaling was, and this was like the week before COVID hit. And so when COVID hit, I kind of realized like this wholesaling thing was cool. I was like, how does this guy have these massively discounted properties? And how does he keep saying that he's going to the courts to get them? And it's just like, it was extremely intriguing to me. And so when COVID came, there was more time, and I just kind of like went down like YouTube University, way deep down the rabbit hole. And at that time, because that was about like 5 years ago, there weren't like a lot of like wholesalers in the Boston area. And I mean like in the city of Boston. And so like people told me I was crazy, like it couldn't be done. And all that I did is I just listened to the other YouTubers, and I was like, well, if they can do it, I can do it. And I actually reached out to some and like hopped on phones with them. And like, I don't know. Honestly, a lot of people told me that it was not a good market to wholesale in. And so I was like, all right, well, whatever. I got a lot of time. I'm going to try. And I remember I got this software called Lead Sherpa. It's for like text message marketing. I don't even know if it works anymore because that's kind of like a dead thing now. But
Yeah.
I remember like sitting on my buddy's couch in the middle of COVID. We were watching a movie, and you had to like click to send each message. And I would be sitting there like clicking. And people would start texting me back like the price of their property. They'd be like $550. And I'd look it up and I'd be like, that property's worth like $800. And so I was like, oh, wow, there's really something to like this wholesaling thing. So I obviously kept learning and slowly did a few deals. And then I was doing more deals, and I built a company. We had a team of like cold callers, data scrapers, lead manager. And I think in like 2.5 years, something like that, we ended up doing like about $1 million of assignments. And so we definitely figured it out. And it was really cool because a principle that I really kind of like really believe in is like this whole idea of like profitably learning forward. So like at the beginning, I didn't really understand real estate. I mean, I thought I did, but I didn't. And so what kind of like kept me really motivated is that every time I was doing a deal, I was learning something new, and we were making money. And so it was just kind of like building a snowball and like momentum in the right direction. And at a certain point, what happened was like we would sell somebody, like this is actually, I think, a real example. So like we sold somebody some property for like $485,000. They made like $40K in an assignment fee, which I was like, oh my God, free money.
Yeah.
That property with, I don't know, $40,000, $50,000 worth of work was worth like $800,000. And so a couple of years later, we started to realize like, although we were making money, we're also leaving a lot of money on the table. And long-term wholesaling is like flipping. You know, you do a deal, it's awesome. You get a rush, you get high from it. And then it's like, okay, well, you got to do another deal. And so it didn't really achieve like the long-term goal of building wealth, passive income. Also, this whole idea of like passive income as like a real estate operator is like kind of farce. There certainly is income, but it's certainly not passive.
Yeah.
And so anyway, so we kind of started like cherry picking our own deals. And so back then I was heavily focused on like the Burr model, which I'm sure all the people listening understand. But the whole idea is like we just were buying these beat up properties for a very discounted price, fixing them up and refining out. And I did that. I think like we built a portfolio like 60 or 70 units, but it was a really scattered portfolio, like Northern New Hampshire, Western Mass, Central Mass, Northern Central Maine, right? And so it worked. Like we did it, and there was a lot of brain damage involved, but like it proved that the model worked. And then we started to get this idea that it was like, okay, well, if we were able to change to like having a pool of investors that was invested in these projects for a little bit more of the long run, we don't necessarily have to get as good of a deal, and they don't have to be as much brain damage. They can still be very good. But instead of like refining out in 12 months, we could say, okay, we're going to refine out in 1 to 3 years. And that was kind of like the first step and the first kind of like thought process that led us into like real estate syndication. And over the past, well, now we've bought real estate for like, I think the first property we bought was almost like exactly 3 years ago today. And now we have about 550-ish apartments under management. We have our own management company, our own construction company, so we're vertically integrated. And let's see, yeah, I mean, we've continued to do, I mean, we can get into like all different stories about like how we scaled, but like the one thing that I kind of have come to realize, at least in our model, because I have 3 other business partners who've chopped up the roles and responsibilities, it's like scale helps tremendously in real estate. And it's crazy to me how hard it was to buy these small properties at the beginning and how easy it is to now buy these large deals. And so I think that this dynamic of this like profitably learning forward, it's very much kind of the key principle that I like evaluate opportunities with. Another, I don't know, we can dive into all different rabbit holes, but like another thing is like we switched now from like the one-off syndication model to like the fund model. And we can get into the pros and cons of that, but I'm very, very bullish on funds and a little like anti-syndication. And then also we started buying, I think like about 3 years ago, we bought like an RV park. I don't know if Nick Allerud was another guest on the podcast, but we partnered up. Yeah, he's a great guy. But we partnered up with him to buy an RV park like 3 years ago. And that's a whole, yeah, it is real estate, but it's almost like an emerging asset class. And I like to explain to people, it's like at the intersection of real estate and operating business. So this has, anyway, since buying the first one, we now have 6 of them, and I'm just closing our first fund to go buy 6 more. So we're kind of like now doing a quasi like real estate, quasi private equity roll up of these mom and pop businesses. So those are kind of like the 3 things that I focus on, is like finding and buying value add multifamily, figuring out how to put these, now it's like funds together instead of like one-off syndications, and then also the same thing on the RV park side of things.
Yeah, that's incredible, man. Like your entire story. I mean, even since the beginning, since you're like 13, like this is fucking crazy. Like, I love it, dude. No, it makes a ton of sense. And I do, there was quite a bit of things that stuck out to me in there, man. But one of them being that I definitely find interesting is, especially to your point of like, going from, buying some of those smaller properties in the beginning and like having it take a while to like save up more capital and this, that, the other, to then making that gradual transition to buying larger assets, start having passive investors and partners and JVs and like all kinds of shit, going on, and just using a lot more leverage in a lot of different fashions, as well as, when you were talking about like the wholesaling business that you built, having like that team behind you and just using a lot of leverage in a lot of different forms to really like start to blow these things up, as time goes on.
Yeah, I think like this whole, I was about to say leverage results, but that whole concept, I think it's actually like really important, because I think a lot of people get into real estate because they want financial freedom, they want more time, and ultimately, like, you're going to need to leverage other people's money, other people's time, other people's resources to get any of those things. So I think it's like really important, and like typically I don't know if you ever read the book like Never Split the Difference, like Chris
Yeah,
Voss.
a while
Uh,
ago, but yeah.
yeah, I love that book. That book is like the blueprint for how I built the wholesaling business. But I think the whole concept I kind of like took away from that is like you truly can create win-win dynamics in ways that you may not initially understand unless you really get to know the other person and the outcome that they want. And so I think that that's kind of true, like when building a team, when working with investors, when working with sellers. Um, and so I think like that same principle is what really allows you to get these leverage results.
Yeah. It makes a ton of sense, man. 100%. And another thing that I did really dig that you mentioned, I'm trying to remember, I should have noted what the exact like phrase was, but like learning profitably. Can you repeat it one more time? I forget what you mentioned. It was like learning profitably, like forward. It was like you said it like really elegantly.
It's this whole idea that I just like uh, learning profitably forward, or like it's the whole idea of like failing forward, but it's awesome if you don't have to fail, if you can take some profit along the way. Don't get me wrong, I failed plenty of times. That's like really, I think, what has allowed me to succeed in real estate is that I took plenty of L's before I did this, and then I applied those lessons. And yeah, really, I also like, I think a lot of people are like afraid of failure. Like failure is what unlocks success. So if you're not willing to fail, you definitely will not be successful, in my opinion, unless you're just extraordinarily lucky.
Exactly.
Yeah.
Yeah, no, I 100% agree, man. Absolutely. Yeah. Yeah, I think it's super neat, man. Especially too going from the wholesaling to the multifamily side, eventually, jumping into the RV park as an asset class, that you guys are super interested in. I guess take us through when you were I guess maybe like when you first discovered like the RV parks as something that like was starting to become attractive to you, not as opposed to multifamily, but as in addition to multifamily, with like growing your stuff.
Yeah. Okay. So like, in my opinion, like, I'm not sure if most of the people who are listening to this are like in the Massachusetts, New England area, but like, in my opinion, like in the New England area, just like fundamentally, there's a mismatch in terms of supply and demand for multifamily, where there's just a shortage of housing. And that, with the government assisted debt, just like creates a long-term market dynamic that's very interesting to invest in. And then if you buy right and operate right, I think you can get phenomenally high returns with like moderate risk. Because I talk with operators in other parts of the country, and I think this New England is just like totally misunderstood. Like, just because we have more tenant friendly laws does not mean at all this is a bad place to invest. But I hear this all the time. People are like, I would never invest there, only in the Sun Belt. And then you look at like the vacancy rates in like Austin, Texas right now, and you're like, whoa, hold on. Rents went up over the past couple of years in Boston, not down. But anyways, yeah. So like, wait, your question was about like how we kind of like made the jump from multifamily to RV parks.
Yep, pretty much. Yeah, just like how you kind of found it, and that kind of thing.
Okay, so a couple things happened. Like, I am a deal junkie. Okay. And so I, at the beginning, was able to find deals substantially faster than my partners were learning to like execute the value add plan and just operate the assets. And so I was kind of extremely bored. And they literally told me, like, do not find more deals. And so I think like I love to bike, and I was just on a bike ride one day. My family has a farm out by like Fitchburg, which, as you probably know, is like kind of the middle of nowhere. Especially like if you go north of Fitchburg to the town called Ashby, which they're in, like there's literally nothing in the town. There's no attraction. There's nothing. And so when I was biking, like this thing that I was biking on this main road, it's a like family campground. And like growing up, I used to go camping with my family all the time, but we would go to like the White Mountains or like the Berkshires or Yellowstone, right? Like not like Ashby. And so it was kind of like totally beat up. And I kind of figured I would just be walking into like a distressed, vacant property. And anyways, I turn off the main road and I follow the signs. And I pull into their driveway, and there's like one of those like little check-in booths. And I'm looking, and it's not vacant. As a matter of fact, it's like filled with like people in RVs, and it just like really kind of piqued my interest. So I asked to speak with the owner, like see if he was available, and he was. And I was like, hey, like, what exactly is this place? And he was like, oh, it's an RV park. Are you looking for a spot? And I was like, I don't know if I'm looking for a spot, but do you have one available? And he was like, oh no, we're actually like booked out for like multiple years in advance. And I was like, oh, interesting. I was like, do you mind if I just like bike around? I don't really get it. I'm just like trying to understand.
Yeah.
Like, oh, sure, man. So I bike around and I come back, and sure enough, the place was like filled. And honestly, a lot of the RVs in there like looked very expensive. So I was like, this is weird. I don't get it. And there wasn't like a water slide in the park, or it wasn't like on an awesome lake, or like I still didn't really get it. So I asked the guy, I was like, hey, like, would you ever consider selling? And he's like, oh, absolutely not. It's a third generation family business. It's a cash cow. And I'm kind of thinking to myself in this moment, like, if all of that is really true, there must be something interesting, like in this space, because he wasn't really, in my opinion, like running a good business. They're just really high end customers there. So I went home and I literally just Googled like RV parks near me. And I just started calling. And the honest truth is, the first person that I called picked up, and they actually were interested in selling.
Holy shit.
And so I was like, oh, cool. He was like, yeah, but I'm not going to tell you about the business unless you're like a real person. And I was like, oh, when would we like to schedule an appointment? He's like, you can come here right now. I was like, all right, I'll be there in 15 minutes.
I'll see you soon, man.
And anyways, I went there. He gave me like an hour and a half tour. The place is called like Field and Stream RV Park. It's the first one that we bought. And it was obvious in the tour that they were the types of people where there was zero deferred maintenance. Everything had been taken care of multiple years in advance, and it was turnkey. And so I kind of thought to myself, I'm like, because from multifamily, like that's rarely a great opportunity. Yeah. So I'm like, you know, thanks for the tour. What's the revenue? How much are you netting? Thinking the guy was going to tell me like this thing's worth like $20 million, you know, because it's so perfect to him. Because at that point I was so used to sellers who are like, this building is amazing. It's worth 100 million. Like, no, it's like 400,000. But okay.
It's worth $10, bro.
And anyways, he just named this price where it was like a 15 cap, and this was like back when like rates were like lower. And so I'm like, that can't possibly be right. And so I asked him for his financials, and he said, okay, sign an NDA, gives me the financials. And sure enough, like the net income that he was claiming was like actually the net income that the park had. And so I'm like, all right, I don't really know anything about this business, but that's why I called Nick, because when you don't know about something, call somebody with more experience. Like, hey, want to partner and figure it out. And when I called him up, he's like, oh yeah, I'm sure we could find somebody to manage it. If the business is as good as you're saying, it's probably an interesting opportunity. So as we were going through the due diligence process, we realized that there's no third-party management company for RV parks. It's like such a niche, like of course there is. But we got towards the end, and we were like, all right, well, how are we going to manage it? And two of my partners, like they didn't have a girlfriend or a wife at the time, so they were just like, we'll move in. You know, there's a little A-frame on site, and we'll figure it out. And I think they kind of thought it was turnkey, so like there wouldn't be like a lot of like work running it. And anyways, they moved into the business, and kind of they surprised all of us because they were able to like double the value of the business the first season. The infrastructure was turnkey, but they weren't operating the business from like revenue driving, pricing, occupancy, etc., to maximize the value. And so because of that, we were able to refinance, I think like 12 or 18 months, like 60% of the equity out. And we learned like we did the refinance like totally incorrectly. Like we actually like more than doubled the value of the park, and we were able to pull out a lot of equity because like, anyways, we messed it up a little bit. But now I think it's something like crazy. Whereas like if we distributed all the actual cash flow from the business, I think it would be like over 100% cash on cash return. Like it would be like insane.
Wild.
And so anyways, we bought a second park, and then that was about like 2 years ago. And then last winter we bought like 4 more parks. And so really the reason that I got into that was because I have like ADD, and then just like, actually be an awesome opportunity, and my partners like really crushed it. And now we're kind of attempting, I mean, we're not really attempting, we're really doing it. It's working out extremely well. Like we're doing this roll up. So like our idea is like 85, 86% of these parks are still owned by mom and pop operators. And our idea is to buy like 20 or 30 of them and then package them up and sell it to like an institutional investor. And again, I didn't come up with this idea. Along the way, institutional investors, they reached out to us, and that's how we kind of figured out the playbook. And now actually that we have like competitors reaching out to us too about buying our portfolio. So this is definitely like a space that's being consolidated. I will say it's not, and I know because people are going to listen to this and be like, wow, these returns are incredible, but it's not like it was like 3 years ago. It's now like getting much more competitive, and it's much harder to find deals. But I mean, I would still encourage people to participate if they want to get their hands a little dirty. It's not like multifamily. Like multifamily, I would consider to be a pure like real estate play with minimal operations. This is like a hospitality asset, so I would consider it a comp to like Airbnb or it's like many Airbnbs in one place, or like a hotel. It's really like the best example is like a hotel where the guests bring their own hotel rooms.
Gotcha.
So anyways, it could be a lot. I don't do operations, so operations totally scare me, but if you're partners, I love it. It's great.
That's badass, man. No, that's super cool. Yeah, no, I can definitely understand why it's something that was incredibly attractive to you, from the get-go, you know what I mean? And it's super neat too. I do find it incredibly fascinating how there's like the actual, tactical property itself, and then there's the infrastructure and the systems and the operations and that type of thing, and how those dynamics essentially like coincide in each other for valuation and that type of thing. I think it's incredibly interesting too, like the point you just made about, kind of like the systems dynamics with, say, like a large multi in comparison to an RV park, with a lot more levers to pull, a lot more systems to have in place, probably a lot more opportunities to increase NOI and that type of thing in RV park than multifamily. But yeah, I think it's incredibly interesting, man. That's dope.
Yeah. And I think also part of like what has helped us a lot is like running a multifamily operation, especially like at the scale that we have. I mean, that's a business, like a property management company. It's a full company. It's just like there's way fewer like variables, and so once you've like seen a good amount, it starts to become very like standardized. And the cool thing about that is that's what makes it extremely scalable. Like multifamily, I would say, is like 10x more scalable than RV parks, because once you have the infrastructure of the operating team, it's just a matter of like growing the lower level hires and continuing to kind of build out your processes. And then like it honestly, like I don't like the way that I kind of see it is like we've hit this scale where at this point, the more that we scale, the easier that it gets, because the more higher level people that actually are like extremely talented, they come in and they can drive value. And so now we've gotten into this like snowball dynamic where it's extremely fun to be operating in that world.
Yeah, I think it's super neat. I think it is very interesting too, like the vertical integration at that scale. Because it's funny, like I've talked to like some syndicators and like to your point, like, in different parts of the country and that kind of thing. And like they're talking about the dynamic of having an in-house PM with like, 2,000 units, 3,000 units, something like that. But to have that at 550, which is definitely a shit ton, like I'm definitely not knocking that by any way, shape, or form. But I think it's super neat to have that in-house at a level like that for the point that you're at the moment. I think it's super cool.
Okay, so like, I don't know if this is true, but I'm guessing like these people that have like 2,000 units, they own like buildings.
Yeah.
is my guess, like complexes. So like I wish our whole portfolio was like that, but it's not. Like, we have a lot of scattered site portfolios. I don't know exactly how many buildings we have, but it's a lot. Like I bet if you average it out, our typical building is like 6 or 7 units.
Yeah.
And so it's way more management intensive. So we actually found that like when we were using third-party management, on these small scale buildings, it was just kind of sucking the cash flow out of the buildings. And so we went in more out of like necessity. We didn't want to be in the management business. We kind of felt like we had to be. When we operated our own buildings, we were able to get them to cash flow really well. And there was a huge change. And it took like, I would say, a 12-month period to go from like all third-party management to all in-house. And I think like in that period, that's exactly when we realized like, oh, we should definitely scale this. And we bought like the turning point for us was we bought this like 196 unit scattered site portfolio in Central Mass. And it was like a bear of a deal to take down, and we had never done it. And I will say it was relatively risky because we had not attempted it at that time, but we learned so much by doing that deal that frankly, now to do another deal that size is like relatively easy. And there's so many dynamics in the acquisition process that we didn't understand that if I was to do it again, there's a lot of not like tricks, but there's a lot of like tactics and strategies that I now implement in acquisitions through the lessons that I learned on that deal. And a big thing that I'm trying to do right now is like some people, they say, I have a buy box. I'm just making this up, right? But it'll be like Worcester, 6+ units, below 165 a door, blah, 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 right? That's not really like how I do acquisitions at all. The way that I like to do it is I'm like more like opportunistic. So if somebody sends me a deal and I'm just making this up, but let's say it's like a 30 unit brick building in Natick, right? Natick, great market. And a lot of people would probably say like stabilized cash on cash for something like that. So somewhere between like 6 to 8%, right? Now, they may be like, oh, but you have to buy it at the right price, all this stuff. Like to me, there are so many additional ways through like creative finance, seller financing, just like deal structure that you can make a win-win by maybe paying more than everybody else. But in that scenario, I always try to like balance out. So like what I would say is like this, and I'm just doing a deal like this actually in Worcester. Like there was a deal that was floating around for a while. Everybody saw it. Nobody bought this deal. When I structured the deal where it has like somewhere between like 15 to 18% cash on cash, which is like, in my opinion, double what you should be getting. And so of course I was willing to overpay because that's a phenomenally good return.
Exactly.
So, yeah, this is like a big thing that I've learned. Like when you get into these, the smaller deals, I used to be like cash offer, this is my price, right? And that's how I would determine it. But I realized like on the larger deals, it's really important to dive into like the returns. And it's not just about the purchase price. Actually, most of the deals that I do now are not about the purchase price. They're normally about the terms. And so this is, I think, like caught the attention of some of the investors I work with have a lot of capital to deploy, and they kind of love what I'm doing because I'm just feeding them these deals that are way above market returns. And like they're asking me, oh, why are you finding these deals? And I'm like, well, everybody saw this deal. I was just the only person that was willing to actually chase down the seller. Be like, hey, you're not selling it at the price that you want. So like, let's figure out how to do this with terms. And anyways, I do a lot of deals like that now. And it's, I learned a lot of seller financing stuff from RV parks. And then I tried to apply it and failed on this, like 200 unit portfolio in Central Mass. And now I feel like I've gotten like really good at it. So now I just like put it in like everywhere that I can. I almost like prefer to do it because then the seller, they have skin in the game. And I've learned how to do it compliantly with banks. And I've done it in a lot of different structures now too. So, I mean, I'm an acquisitions like geek and nerd. So of course, value engineering these deals. It just gets me very excited. I love it.
Yeah, no, 100%, man. I love it. I love your energy, dude. I do. Yeah, it's incredibly neat, especially to your point of like, seeing some of these like, portfolios floating around that, to your point, a lot of people, a lot of, higher caliber investors in our neck of the woods are looking at, maybe it doesn't pencil, move on, don't really think twice, but structuring it in such a sense that, it's a bit more favorable in regards to terms, rather than like the price necessarily, price per door, that kind of thing. But I think it's interesting too. I mean, because to your point, man, like if that seller, obviously there's going to be a lot of different situations, motivations, this, that, the other, but if that seller is, having that thing sent out, all over the place and, people aren't biting or he's not getting the number that he's looking for, well, he's probably starting to get frustrated, and waiting for a guy like you to be like, hey, dude, like both of us know that this isn't trading for what you want it to. Like, how can we figure something out together, and make this thing work in a win-win fashion, kind of like you mentioned earlier, make that mutual as much as possible,
Yeah. And I think that one place that I see like a lot of people honestly going wrong with this strategy, and it's not like that hard to correct, but it's like when you go up to somebody like, hey, will you do seller financing? They're going to say no, because like if I was selling a property, like I would never say, yes, I'll do seller financing, right? It's not like at the beginning of the process, that's what people want. Or like there's very few people that actually want that at the beginning. So it's all about just being like, all right, well, I can't make your number work using a bank. So here's my creative offer and let me know if you want it. And you have to wait like months for these people to circle back. It's not like a thing where they come back in 2 days and they're like, oh, I'm into it. Like they really need to like be smacked over the head. Like the market is not paying the price that they want without creative terms. Yeah. And so I try to just like throw out a lot of offers and put out like a lot of offers like on paper. And I find that a good amount of people are like coming back, especially as like the interest rates went up. People that want to sell and want their price, they're kind of like forced into this. And now that I've done this like so many times, it really helps me because I can just like walk them through at the beginning. I can be like, look, here are the different ways to do it that's compliant, right? If you pick the route that you like the most, we'll structure it that way. And then we can dial in like all the terms and everything. I think that they feel a lot more comfortable that I know so much about it. And then I can explain to them. I'll be like, hey, like a bank isn't going to allow that. A bank is going to allow this. And so having like some confidence and like a certain level of knowledge regarding creative financing, I think is like really important.
Yeah. I mean, dude, because like at the end of the day, like, down to simplify it, like they're trying to get rid of whatever that asset is. And, if somebody comes along with a large degree of confidence in like the out of the box / not out of the box, maybe like different than conventional type of style that a lot of other players are trying to hit them with, that's a huge deal,
Yeah, definitely. And I think like the like one thing, just kind of like give a more granular example, right? When a lot of people say like creative financing or seller financing, like they're saying, oh, the seller's the bank, right? Which is definitely like a strategy that I've used, like whatever, you put 10, 20, 30% down and the seller's the bank for the rest. But like that sometimes gets you the best deal, but very frequently where there's like a win-win, especially when you're like trying to scale and you have limited capital, is getting the seller to hold like 10 to 15% in second position or even not secure just as a promissory note, because that can really allow you to level up. If you have access to 500,000, but you can get 750,000 from a seller, all of a sudden you have a $1.25 million down payment, and just it's massively leveraging your dollars. And so that's something that I like to do a lot. And then one thing that I learned that I will share is that it's harder to do seller financing and creative financing with a bank. So where I see it working like extremely well is if you find like a decently priced property, if you ask the seller, hey, will you hold 10% in second position, 15%? If you pair that with a bridge loan, most bridge lenders don't care about second position paper. A lot of bridge lenders are 15, 20%, 10% down. So in theory, you can do very large deals with very small amounts of money if you set up your capital stack correctly. And that's what I learned on this deal in Central Mass. I was trying to do seller financing. I failed. if I was to redo it, I now know how to do it correctly. And it would be awesome. But I'm actually working on a similar deal about like 250 units right now. And the seller, they've agreed to hold about like 15% paper. So if I can get it at the right price, structure the right like bridge loan, I mean, this could be like a situation where you're paying, let's say, 18 million bucks. You're putting maybe $2 million into the deal, where I would say like normally 18 million bucks with a bank, you're probably raising like 5.5 to like 6 million. So just massively leveraging the dollars. I think that it's like really important, I think, to kind of like nerd out on those structures if you're syndicating or doing a fund, because ultimately, like, your job is to manage the asset to deliver above market returns to your investors. And I find that, like, while it is super important to be a very professional operator and to execute the business plan, the deal structure sets you up for success, like, to a degree that I think sometimes like misunderstood. Like, if you buy a bad deal, it doesn't matter how good of an operator you are. Or if the deal structure sucks, you can work really hard and your investors can get very much like base hit returns. And so, I mean, in my partnership, I do the acquisition. So obviously I'm kind of like obsessed with it, but I see it like very, very commonly, like people are great operators and they're just not really good at finding deals or like structuring them. And so they're just like I see that they're trying to like outwork like a base hit, not so great deal. And so I don't know. I just think that's like a really interesting dynamic that I think is quite common.
Yeah, I think that does make a ton of sense, man. I mean, especially to your point, it's almost like getting the rest of your team teed up from day one of the acquisition stage. Of like exactly like using some of those creative type of strategies and that type of thing, like setting to your point, man. If there is like a bridge loan situation, setting the capital stack correctly and like timing and that kind of thing, and just like masterminding the shit out of the project that you're trying to take down, to then eventually tee up your operations team to like work in accordance to what you already set up initially. And like, I totally agree with that.
Yeah, I think what you're saying is like a better way to explain it. It's like, it's my job to set them up for success. It's my job to find a better deal where they have more of a margin of error. If I find a better deal, we can more conservatively underwrite it. And so, yeah, I think you're totally right. It's just like you do the work on the front end to set them up for success, and then they deliver the results on the back end.
Yeah, that is super fascinating. And you need like both, obviously, it's super strong to be able to execute the end result, but like one without the other, like a heavy skew in each direction, probably won't get less of a result on the back end than what you were hoping. But
yeah,
that's fascinating. That's super fascinating. Yeah, man, I love that. So take us through what's next, man. I know you were talking about the the RV park like roll up type thing, which is cool as all hell, man. That's fucking sick.
Yeah. Okay, well, there's a couple things like for us. Like, number one, I want to shift the model kind of like overall from the syndications or like one-off deals to the fund model, because there's a couple of reasons why. Number one, if you're in syndication, like I said, like, your job is to deliver really good returns to your investors, right? And I just kind of feel that as like the operator and the person who does this like every day, my investors being like passive, I have a much better understanding of like, hey, if we blended these 4 deals together, it's actually lower risk overall than if you just cherry pick the deal that you think is the best. And I always invest alongside the LPs. And so this is kind of where I started to like pick this up, where it's like interesting. Like, if you just think this deal's right, but then you're a little off, or it doesn't play out exactly how you thought, like, there's actually like more, in my opinion, like reputational risk as a sponsor. So the challenge, I think, or the pushback that I think other people would say is, oh, well, with a fund, you have to have all the deals, and there's a risk that you don't have the deals, or it's harder to raise the money because you're not telling the investors what the deals are. And I definitely don't think you can just like start a fund. I think like we definitely jumped through all the hoops to get to this point, but I do think it's way easier to operate in the fund paradigm. And if you truly can give like a better risk adjusted return to your investors. I think ultimately it's just like definitely, I think it's a win-win model. And funds in general, like this is the other thing that I learned from like raising capital. Like when you syndicate, right, it's like you go around and you talk to people, right? A lot of people are investing 25, 50, 75, 100K, right? And there's nothing wrong with that type of investor base. But like personally, I wanted people that could write larger checks. And as I scale up with me. And they don't care about investing in like a 6-unit building, right? They want to be like, okay, like I have $5 million that I want to invest in real estate this year. And I'll test this out. So I'll give you 500K. Next year, I'll take another look, see how these deals went, and decide if I'm going to really size up the investment. And so like switching the LP base, which is something that I've done this year, it's taught me, I think, like some quite valuable lessons, because when you have more sophisticated investors, they're not just like the equity that you need to close. They actually provide, in my opinion, like a lot of value. They can give you good advice. They can connect you with other people. If something goes a little wrong, instead of like being like, oh my God, I shouldn't tell the investors, right? Actually having a conversation with your investors very frequently, you can solve the problems. So I like really love this dynamic of like getting into this world where the investors are contributing like more than capital. Not to say that the small scale investors can't, but I love the idea that my investor has already done something similar. Now they're just retired and they get it. And I also like pitching people that already understand. I'm not educating them on like the basics of how it works. They're like getting into it. And again, like asking really great questions and making you consider parts of the deal that maybe you didn't. So definitely we're kind of migrating over to this fund model. And as part of the fund model, the investors are bigger. So we will continue to raise more money and probably continue to shift the deal size a little bit higher, I would say. But definitely like everything that we're interested in, I would say it's like sub-institutional. So kind of in the like $5 to $25 million range. Everything like, I don't know, a lot. I've looked like I'm writing an offer for like $73 million this week. Like number one, I don't think we're going to get the deal because I think somebody's going to pay like 80 because they're out of their mind. But also like those returns in those type of deals, they're just much more like compressed. And so I find that when you go above where all the little investors are and below where the big guys are, there's a lot of interesting deals. And in order to play in that space, you still need a lot of capital. And so we're trying to build on the multifamily side, you know, a pretty sizable operation, but that's very targeted to these like mid-sized deals. And so to kind of like pair that, I'm also kind of considering spinning back up like a acquisitions pipeline, but instead of targeting like 3 families and 6 units, like we'll be more targeting like 20 unit, 30 unit, or like scattered site portfolios. And so that's kind of like what I'm planning to do over the next year or so.
Dude, I love that. Oh, that makes a ton of sense. I find that incredibly fascinating about like your investor pool leveling up and like also being able to bring experience, from past like passive investments they made, maybe even past, if it's past sponsors that, to your point, like might have retired, like hung up the jersey and, now they're like moving on to greener pastures, and, being able to bring different advice and a lot of different perspectives at a much higher level, to throw a couple more variables that maybe like you guys, definitely thought about, like maybe it's something that is more of a concern for some people from a past experience that they've had in other projects. I think that's super fucking cool. And like the higher level you go, like the more advice and like or like a higher caliber will come with it. I think that's super interesting.
Yeah. Also, like for me, like I love it. Like, you pitch an investor, right? Like my favorite thing to understand is like, well, how did you actually acquire this money to invest, right? And I just find like the bigger investors have much more interesting stories to tell you. And so I love it. That's like my favorite part of the Zooms or whatnot is like actually just learning about like the former business that they did or whatever, like, because they have different problems, like some people that are in like private equity, right? They're like, well, we own 4 companies and they produce so much cash flow a year that I'm just looking for a place to park it. And I want it to be in kind of a tax deferred environment, which real estate provides. And so, yeah, it's like really interesting. You know what I mean? Like when I go hang out with my buddies, they're not like, well, my problem is that I have $5 million and I don't know exactly what to do with it. So it's like, it's just like really, yeah, it fascinates me. And I really like kind of like steep learning curves. So like one way I kind of felt that I could continue to learn a lot through real estate investing is to change the LP base. Yeah, it's just been like kind of awesome. So the RV park, this is kind of like part 2 of what I'm interested in doing next. Is like the RV parks, they kind of introduced me to this idea of like buying businesses, which like I'm sure like like Cody Sanchez, she's like
absolutely
talking about it. And I'm starting a monthly meetup that's all about like buying boring businesses. But that whole world is fascinating to me because in some ways, I think that like I saw this in the RV parks, and I think it's very true in a lot of other small and medium-sized businesses. It's like, okay, right now, if you take like a 3-family, right, in Everett, let's say, if you just type in the address on Zillow, right, it's going to give you the Zestimate. Or if you type it in on Redfin, it's going to give you the Redfin estimate. Or if you type it in on Realtor.com, right, it's like there's so much transparency in the marketplace that it makes finding discounted opportunities, I think, a lot harder. Versus like if you call up some guy that owns like a sprinkler installation and maintenance business, right? He can't type in his business on Google and be like, this is the value of my business, right? Which to me, as an acquisitions person, is like fascinating because then you have to actually get into the true win-win dynamic of making a deal with somebody like that. And it's similar like with the RV parks. I think that like a few years ago, it was absolutely true. Like you would call them up and they'd be like, well, how much is the business worth? Like and now there's like a lot of like brokers and things calling these people and like telling them it's worth like 5 times more than it is. But it's yeah, it's just that's kind of interesting to me. And then I also really like in the RV parks, it's much more multidimensional than multifamily, where there's so many ways to add value. And so my like part of what I really want to do over like a couple year period is I learned all about this idea where it's like if you take 2 businesses that make $1 million a year and put them together, it's not worth $2 million. It's worth like 2.3 million. If you put like 3 together, it's actually worth like 3.7 million, right? And the multiple goes up as it gets bigger. And so I love that because I learned that the big investors, the big private equity companies, right, they're not actually willing to do the work of buying mom and pop businesses. And so having like the skill set and the infrastructure to go in and like target a specific niche and roll it up to a scale that a private equity company will like, I'm very enthusiastic about that. And I kind of love the fact that we just stumbled into it with the RV parks. And probably after we do that portfolio, we'll pick another niche and roll it up, because the acquisitions for like a business in some ways are a lot harder than real estate, and in some ways they're a lot easier. Like I think getting in touch with business owners, it is a little harder because you can just like, there's all sorts of like public record data and everything for houses, and you just go on YouTube and it explains everything. Like finding business owners is more work, but I think that making deals with them is a lot easier. And so to me, it's like, it's worth it because there's a lot more juice there. So I like things like that. Like you put in the upfront work and then you actually get the reward.
Yeah. I think that's all incredibly fascinating, man. Especially the, to your point about like, when it comes to like the transparency and that type of thing. And it's almost like that principle in itself of, I guess like, a lot of I'm trying to figure out what I'm trying to say, but it's funny that you say that about like, the business buying space, because that's something I started learning a little bit about that relatively recently. And I bought I forget what that book is. It's like it's like one of the really popular like M&A books. I'm forgetting off the top of my head. Oh, there it is. It was stacked like behind the screen. Buy them bills.
Oh, that's like everybody. I haven't read that book, but everybody talks about it. I get the concept though.
But yeah, it's essentially that. And it's like I just started learning about that space, man, because I thought it was super dope. And I was talking to a buddy who buys plumbing companies in like Southern New Hampshire, Massachusetts, Central Mass, like that kind of thing. In addition to,
is this Mike?
Yeah, it is.
Oh yeah, nice.
I fucking love Mike, man. Yeah, and like he was one of the ones that introduced me to that concept. And like the vertical integration and that kind of thing. And yeah, like he was talking, we had a lot of conversations about it, but because that was one of the things that I was interested in. I'm like, not to, have kind of like a shiny squirrel or a shiny object, squirrel moment, if you will. But I was like, oh, well, this space is kind of dope. And I'm like, me, for my W-2, I've done HVAC for like 7 or 8 years. So I'm like, oh, well, what if, like a resi HVAC company in like Central Mass, and like I was going through the book trying to like figure out how the hell it all works and that kind of thing. And like the loans and that kind of thing. I kind of put it down for the moment, but yeah.
Well, I think like your point about like the shiny object, right? Like I think that is really important because as a person with ADD, I get excited about things. But what I've kind of learned through like scaling a business is that things actually get like easier as they go. So like it doesn't make sense for me to go like start 5 projects, right? Or buy 5 random businesses. That doesn't really make any sense because I already have 2 businesses that are at a pretty good scale. And so where I kind of see it in like there's this podcast called like Acquiring Minds, and it's all about like buying businesses. And I listen, like I get obsessed. And I listen to like 50 episodes in like 3 weeks. But so what I kind of realize is like this whole idea of like leveraging things, it's really important. So when I was listening to that podcast, like it gave me an idea. I mean, this is kind of a rabbit hole, but we can go down it. It's like inside of real estate, there's like so many things that happen that actually are businesses, right? Like bookkeeping, that's a business, right? So like, or at our RV parks, there's a ton of like septic pumping, that's a business, right? So like at this point, it has way less to do with like, I'd be like, oh, let me go buy like I have no idea, whatever, like a trash company, right? Because that's not like really that like relevant, I think, to like how we're set up. But like if somebody like out of the blue was like, hey, like I own this like bookkeeping company and I just like really don't want it, I'll pretty much like give it to you or like finance it to you for like a little bit of money. Like at the scale they were at, like we have third-party bookkeepers, but honestly we could have in-house bookkeepers. So like through vertically integrating, right, and then systematizing and spinning it off through like a partnership, I think there's like a way to do a lot of these things where you're not actually chasing rabbits, you're actually building a much more solid foundation. And at a certain point, that foundation is so solid that you can bring in somebody else who's passionate about scaling a bookkeeping business and say, hey, I have this whole book of business for myself. And when I bought the company with 30 other clients, if you want to come in and take this to 200 other clients, we can structure like a win-win agreement. And I actually am doing that in like 2 different examples, like in our own business. And so that's kind of like one thing that I definitely have been navigating and trying to hold myself more accountable this year. You have to be like super careful, right? Because real estate is a long game, and it's not something to be like, oh, like if I took $100,000 and invested in real estate, let's say you get a 8 to 10% return, right? And if I invest it into a business and get a 25% return, then I should invest into the business. I actually don't really think that that's true because businesses have a tremendous amount of risk. They don't have the same tax benefit, and they don't necessarily have the same like long-term, I think, like inflation benefit, but it really depends. Like, because real estate doesn't really get like disrupted. Businesses get disrupted and industries disappear quickly. Versus like housing, it's a fundamental need And so that's why, like, from my point of view, like, I would never stop doing multifamily, but I think it's extremely interesting like, I think it's extremely interesting. Like, I don't flip property. I just buy it, burr it, keep it with the investors. But on the other side, like building a company and then selling it, that also seems like a very smart strategy, only if you can build out a team that can support doing two things. And right now we are doing that, multifamily and RV parks. But I feel like that's probably like plenty and there's no need to kind of like go beyond that. But it is really interesting to me. And I think you can learn a tremendous amount by listening to other like business owners and business operators for how to like build out a real estate company like much more efficiently, because I do think that operating a business is harder than operating real estate. So if there are people that are really good at operating businesses, I think they actually have like a tremendous amount to teach you about real estate. But a lot of people, I think they look to other real estate investors to learn. And while that could be a good strategy, I think it's good to look a little outside the box.
Yeah.
And that's like definitely one way that got really good at wholesaling. Like I learned the conventional strategies and then I was like, oh, wait, so this is really just like direct to seller marketing. This is used in like a ton of different industries. And so I started pulling tactics from like other places that weren't on like YouTube to teach you about wholesaling, and it ended up working out extremely well.
Yeah. I think that's super interesting, man. Again, because it's funny that you say that, because I talked to a buddy about this recently. He's starting a pretty interesting passion project type of business. I can't really talk too much about it, unfortunately, but he's another, real estate guy, like his house hacking, that kind of thing, like doing a little bit of wholesaling here or there, that kind of thing. And he was telling me about, he started going on like meetup.com and like Eventbrite and looking at events in Cambridge for like private equity and like, different types of, what's it called? Like venture capital, like in some of those like types of events. And we were talking about this for like an hour one night. And he's like, yeah, dude, there's people like you go around the room and like everybody has like a different type of project that they're trying to, do this for. And like this dude's has like an MIT background and he's trying to build this crazy ass like biotech thing. And like, here's my buddy trying to do his thing. And like, but it's super neat. And we were talking about it because, dude, like to your point, like I thought about this even for myself. And like, all I really know is like the real estate space, So it's like there's a whole nother fucking world out there. You know what I mean? That a lot of the principles like are the same in a lot of different, types of models that are drastically different from each other. And it's like, you gotta, step outside the house once in a while, figuratively speaking, and like, go smell the roses like in other areas and check things out,
Yeah, I totally believe that's why I'm starting like a buying boring businesses meetup instead of like another real estate meetup. Everybody has a real estate meetup.
Yeah.
But like I think that by kind of like targeting and building out like a community and a group that's interested in like a parallel kind of industry, but not the exact industry. I just think that there's like so much to learn because they have a completely different set of like resources too.
Yeah.
And I think sometimes like bridging the gap between multiple worlds is where there's like a ton of value to be created. And you do have to kind of go out on a limb a little bit because it doesn't always like work. It doesn't always pay off. But when it does, I think it's like, it's incredible. Like I learned so much more about the financing structures for acquiring assets by talking to people in private equity than people in real estate. People in real estate, they do it all the same, seller financing, hard money, bank. Okay? And all bank loans are pretty much for real estate structured almost identically with like very small kind of differences.
Changes. Yeah.
In private equity, that's not true like at all. Like there's so many ways to finance something. And that made me kind of realize like, wow, their level of sophistication with debt, it's, let's say 10x greater than with real estate. And if I went in, and not to say that I have to do it, but just to understand it, some of those tools that they use might allow you to take concepts like BRRRR totally to the next level. And especially when you're just trying to like leverage a pool of capital to buy more assets, I think that there's many more creative strategies than people typically kind of like understand. And like, yeah, it's just very, very interesting to me because you would never really like push the bounds by staying inside the real estate bubble because everybody's listening to the same content, reading the same books, right? But you go outside and like when you say burr and they don't know what that means, it's I'm in the right room. Like this is about their world.
Exactly. It is incredibly interesting, man. And yeah, like I said, I was just talking to my buddy about that type of concept, and I was like, wow, like I gotta get out more. You know what I mean? It's like we gotta like look outside, like, And yeah, to your point, man, I do find it incredibly fascinating. And exactly, it's like I love the way you described that. It's almost like, for the vast majority, like most people in the real estate space are consuming the same type of content, have like the same like 5, type of ways to do something, or like, finance something, whatever, this, that, the other. And like, that's kind of the bubble. It's like, once you kind of get that, it's like, all right, like there's only like a couple ways to do this. And like, that's it. And like, that's kind of it. But stepping outside the bubble and seeing, some of the same type of business principles to do similar activities with a whole different, in a whole different space, but those principles can be applied to the real estate space is incredibly fucking interesting. Super interesting.
Yeah. I can nerd out about it.
I hear you, brother. I totally hear you. Wow. I love that, man. Damn, dude. I can talk to you all night, dude. I know it's a little bit late, man, but dude, thank you very much for coming on here, man. This was absolutely awesome. We're on social media and stuff. Can you be found?
You can find me on LinkedIn.
Sure.
I think like my name on there is like Ben J Simon 93. I think if you go like LinkedIn.com, Ben J Simon 93. But to be honest, I'm not on social media. Like I think you can find me. Occasionally I'll go on there. I don't really like I run my business on the phone. I don't really use a computer, and people that I work with, they just call me. And I think that is totally best. I mean, I'll put my cell phone number out there. Like if anybody wants to call me, they definitely can. Like my cell 617-233-7576. The one thing that I really like to do, like right now I'm very busy because I have a lot going on, but the one thing that I am like really passionate about is if there's like younger people or people that are getting into real estate and they want to get like really good at acquisitions and they're actually willing to like listen and take advice. I love working with them. And actually right now I'm like working with this kid who came to a talk that I gave at a meetup. And like very quickly, I mean, it's December. He started working with me like at the end of July, and he's gotten like good at acquisitions. Not actually trying to hire him. So I really like that like one-on-one. But I'm kind of crazy. So I find people that vibe with me, they like want to go all in. They really want to learn about acquisitions. And so, yeah, if anybody out there is like into that, they can reach out. They can find me on LinkedIn. But yeah, it's interesting. Some people are really good at social media and I'm really bad at it. So I'm just like, I'm not like, oh, I'll do it moderately. For me, it's all or nothing. So like, I posted like a little bit. I was like trying to figure it out. And I'm like, this just feels like so unnatural to me. Like I like connecting with people one-on-one. Social media is all like one-to-many. And to me, that's like a shallower conversation or something like that. So like it just isn't, it's not the right fit. So anyways.
No, I agree with you, man. Yeah, no, I completely agree with you. I think social media is a tool and it's not one that everybody needs. Some people fucking kick ass at it and some people run incredibly successful businesses completely without it. I think
you're great at social media. To be honest, like I think like real estate, like local person on social media, you're definitely very high on the list. Because you're good. The thing is like you're very consistent, and so I think that's why we've kind of like burned your name and brand.
I'm sorry to most people seeing my face like every day.
Honestly, it's very effective. I think you like I don't know. I think you're like, for somebody who wants to learn, I think you're a good person to kind of like follow and understand what you do, because I see you have the group and people are, it's like actually an active group. People are like talking, contributing value. So you definitely have done it very well.
I appreciate that, man. It means a lot. It does.
Yeah.
It's
a lot of work, and you really got to put yourself out there too.
It's a lot of work, man. It's freaking annoying sometimes, but that's definitely going to, leverage some VAs and that kind of thing, but yeah, no, I totally hear you, brother. Yeah. I'm excited for next everything, man, just in general. So
yeah, definitely. And thank you so much for having me on. It was definitely fun. You said
absolutely,
it was
man.
a good time, and it was a good time.
Fuck yeah. These are always fun, man. I like to just, have a good time. You know what I mean? And yeah, this was great, man. This was awesome. Thank you very much, dude. It was super nice to see you in general, because it's been a little while. So it was awesome to catch up for a bit, man.
Cool. Well, have a good night, and we'll definitely talk soon.
Definitely, brother. You as well. Thank you again, man.
Yeah, I'll talk to you soon.
Alrighty, man.
That's a wrap for today's episode. We want to thank you for being a valued listener of the Creating Wealth Podcast. Make sure to visit www.creatingwealth.com to connect with us. Dive into our ever-expanding library of informative blogs and explore a wide range of additional valuable resources. Stay tuned for our next episode as we continue to create wealth together.